Private purpose trust funds. Now these are interesting. Remember permanent funds? We talked about permanent funds. What were they again? It was you kept the principal and you gave out the income to the public, right? Alaska Fund, right? Private purpose trust funds are like permanent funds, but they're different. Let me give you an example. Somebody came up to you and said, I want to give the town $100,000. And you say, oh, thank you very much. What could I use it for? And the person says, you know what? I want you to only use this for scholarship for children of police officers who were killed in action. And you say, oh, you mean I can't use it for anybody except for them? And that person says, yes. That's a private purpose trust fund. Why? There is a specific recipient. It's not the general public. It's not everybody. It's some specific, they could be part of the population, but they are what? Specific to who can benefit. Remember, in permanent fund, you could only spend what? The interest, not the principal, right? Private purpose trust fund doesn't matter. You can spend both the principal as well as the interest. So with private purpose trust funds, you can spend both the principal as well as the interest. Okay? So, if I asked you this question, there is a public purpose, everybody benefits, but you can spend both the principal and interest. Where would you account that for? Special revenue fund. 3 different areas. Listen to this again. Our government can spend in 3 different areas. You can spend it on everybody, keep the principal, in which case it's the permanent fund. You can spend both the principal and interest on everybody, in which case it's a special revenue fund. You can spend principal and interest only on a subset of people, then it's what? A private purpose trust fund. Understand the distinction between permanent fund, special revenue fund, and private purpose funds, because they seem similar, but they are not. Got it? Those 3 things. Permanent fund is what? Keep the principal and spend it on everyone. Special revenue fund is what? Spend the principal and in the interest for everyone else. And private purpose is spend it only on specific purpose, but you can spend both principal and interest. The second one is where you can spend both principal and interest for the general public. That's special revenue fund. Yeah. So that's what this slide is about. The accounting is accrual based. It's pretty straightforward. You will see that when you one of the things that you will notice is, let me show you one item. I want you to look at this. There's not much activity going on private purpose trust fund, but what I want you to notice is something. See the word additions? Not revenues, what? Additions. There are no revenues in fiduciary funds. What do you see? Additions. And then what do you see? Deductions. No expenses, no expenditures. Instead, what do you have? Deductions. And then you have your net assets, which we now call net position. Okay? So that's something that you need to understand. And I told you about agency fund. It is missing investment trust fund, but you'd have the activity. Guess where most of the activity is occurring? Pension trust fund, which we are going to go to next. Now, this is one topic which is of the greatest interest to everyone. And there's a reason for it. Remember when I showed you the statement of net position for our state of New Jersey? You saw this number called net pension obligation, worth billions and billions and billions. And then I taught you about interperiod equity, which is what? Well, whatever you spend today should come from your revenues from today, right? You shouldn't be spending things today where the revenues will come 20 years from now, your children and grandchildren, right? Violating the principle of interperiod equity, right? Now, pensions are interesting because this is